Michael Burry was one of the first people to predict that the housing bubble would collapse as early as 2007. Being the contrarian investor he is, everyone thought that his prediction was crazy, and it was during this time that prices continued to surge. Today, he consistently mentions that this market silliness is back and keeps on warning us about the stock market crash. To back up his words, Burry recently sold all of his stock except for one. During the bubble in 2007, Burry's investors became so nervous and frustrated with Michael's unconventional trading style that they demanded to withdraw their capital. However, by putting a restriction on withdrawals from the fund, Burry simply rejected the investors' requests, infuriating his clients even more. But as we all know, Burry's analysis turned out to be accurate, and the question is, will he be right once again? Today, we're going to cover his contrarian investment strategy, Burry's predictions of the future, and why he only kept one stock in his portfolio. Burry is a contrarian by nature and is eager to view businesses and society from a different perspective than most people. He recognized this early on and believed that businesses with little to no income or profitability had been grossly inflated by the internet. His hedge fund shot up like a rocket ship after he started shorting these stocks right away. Michael J. Burry generated a 55% return in the first year despite the S&P 500's 12% decline. The market fell sharply for the following 2 years, but Burry's fund generated returns of 16% and 50%, elevating him to the top of the field of investors. Vanguard, White Mountains Insurance Group, and renowned investor Joel Greenblatt were among Michael Burry's original small group of investors. By the time the total assets under control reached $600 million, their investments had increased significantly. In 2004, Burry was overwhelmed and was rejecting investors. But as Michael Burry started to investigate the subprime lending industry and bank balance sheets, he soon got a new idea. He observed numerous inconsistencies in the market's unviability. He saw the subprime market's riskiness as millions of borrowers who had little income and little assets purchased homes and automobiles using a great deal of leverage. Some borrowers took out mortgages they couldn't possibly repay if interest rates climbed and made extremely small, or in many cases, no down payments. The banking system, however, was valued as though all of these mortgages would be repaid. Burry understood that this was not sustainable in the long run. Burry started warning his investors about the system's tremendous risks at the same time. Most of his investors were institutions, and they were not interested in his theory. All of their previous investments were based on the idea of a reliable system free from subprime mortgage risk. Investors started to feel uneasy and asked for their money back. Unfortunately, Burry had already entered into a number of lengthy illiquid bets against the market, betting that the cost of mortgages would decline. Burry just declined the investors' demands because he would suffer a significant loss if he exited the trades. As more and more individuals became aware of the systemic concerns in 2007, the market abruptly began to move in his favor. Then, starting with Bear Stearns, the dominoes started to fall, followed by the Lehman Brothers, AIG, and the rest of the financial sector. Burry made $100 million for himself and $700 million for his investors as a result of his successful investments. Burry is making the call once again. Michael had a sizable stock portfolio at the beginning of the second quarter of 2022. He held many other multi-million-dollar stakes, including about $19 million in Booking, $18 million in Alphabet, and $18 million in Meta. He completely sold all of the positions in the second quarter. No one was spared. The move was shocking to say the least. However, his actions were something Burry's followers had already expected. He has been sounding the alarm for weeks that this stock market fall might become ugly. He once likened it to the financial catastrophe of 2008, when the S&P 500 had already dropped more than 20%. He added that the market sell-off was only 50% finished. The Burry bear thesis is simple, at least as much as we can piece it together from his tweets. Michael Burry thinks that while inventory building will cause short-term disinflation, ongoing labor and commodity shortages will cause higher than normal inflation in the long run. Additionally, he thinks that the unfavorable economic effects of this high inflation would be worsened by the US government's weak policies. The result will be a severe recession in the US economy. Burry claims that this severe recession would result in a sharp decline in corporate profits, which has not yet been factored into stock prices. Burry predicts a stock market crash as corporate profits decline over the following 12 months. Basically, it sums up the Burry bear thesis, or at least our understanding of it based on an analysis of his constantly cryptic tweets. In essence, Michael Burry doesn't think inflation will slow down. He believes stocks are doomed as a result, therefore he sold everything. Contrary to popular belief, Burry's decision to sell everything wasn't even the strangest aspect of his fund's most recent 13F filing. He purchased more than 500,000 shares of the privately run jail company, the GEO Group. Crazy, huh? Last quarter, the man sold all of his $200+ million worth of stocks. Then he invested $3.3 million in a stock of a private prison. But what is happening here? We believe Burry is betting everything on the idea that America is doomed. It argues that if Burry's forecasted recession is unusually bad, jobless rates will increase. Typically, crime rates increase along with rising unemployment rates. Burry's wager on GEO Group appears to be that crime will significantly increase over the course of the following year as the American economy enters a deep recession. The wager could also include a political component. Donald Trump, the former US president, advocated for private prisons, and throughout his presidency, private prison spending soared. In fact, GEO stock increased by more than double in the first 2 months of Trump's presidency. Given the modest position, I think Burry is less likely to be pounding the table for GEO Group specifically, and more likely to be expressing his opinion on the market as a whole by selling everything but GEO Group. Burry is known for defying Wall Street consensus, so it's likely that he feels the market is overheated in the short term and chose to go to cash because bullish sentiment has returned to the market as the major indexes have risen off of their lows. For instance, he just deleted a tweet he had sent on the current NASDAQ rally and prior bear market rallies. This isn't to imply that GEO Group has merits, which probably also contributed in some small way to luring Burry's investment. Without getting into politics, the company's primary activity is the provision of private detention and correctional facilities, which will always be unappealing to some investors. A contrarian like Burry will find this mindset to be music to his ears because going against the tide can present opportunities to buy inexpensive equities. GEO Group trades at only 7 times projected earnings for the following year, which is much less than the industry average. Burry's choice of position can potentially constitute a directional wager. Republicans are expected to take over one or both chambers of Congress in the 2018 midterm elections, which might result in the reintroduction of stronger criminal justice policies, according to several pundits. This point of view has some merit, and GEO Group might stand to gain from the situation. He compares the current financial situation with that of 2001, just before the terrorist attacks of September 11th and the WorldCom and Enron scandals when the dot-com bubble was beginning to burst. For months, Burry has been predicting a decline in stock prices. For a time, his predictions proved to be accurate as the S&P 500 produced its worst first half of the year since 1970. He estimated that the market was around halfway through its drop at the end of June. However, since then, the Nasdaq 100 has increased by more than 15% and the S&P 500 index has gained over 10%, even if markets open lower after solid US jobs data increase the prospect of additional rate hikes. And his predictions of a market meltdown weren't always accurate as they were in 2008. For instance, Burry predicted an impending stock market meltdown in 2017, but it never happened. In the end, there are a few takeaways as to why I don't believe investors should support Burry in this decision. First, Burry only has a minor share in the company, making it of little consequence overall. Second, a 5 or 10-year chart reveals that GEO Group shares have significantly underperformed the S&P 500 over the previous 10 years. Although the price of the stock may be rising temporarily, it has a poor track record of generating profits for shareholders. And lastly, since 13F filings only provide a snapshot of the prior quarter, it's likely that Burry no longer owns this stock now that the third quarter has been going on for more than 6 weeks. Shares have increased roughly by 16% since his acquisition, with a current price of around $7.70. Given his opinion that the market is inflated, it's probable that Burry has already cashed in on the opportunity and earned a sizable profit on the stock. What's more, the current evidence points to a considerable slowdown in inflation. Stock levels are increasing, prices for commodities are falling, and energy prices are decreasing. The cost of homes is starting to decline, and growth in wages is slowing down. The fundamental causes of inflation are all moving in the correct direction. Stocks won't crash if these trends continue, rather, they will skyrocket. I believe many investors would be better off sticking to investing in businesses that have generated long-term value than blindly following Burry's portfolio. But what do you think? Are you going to follow Michael Burry's lead? Why or why not? Let us know in the comments below. And if you enjoyed this video, remember to leave a like to help the channel out. If you want more videos like this one, then make sure to hit the subscribe button. We'll see you in the next video.